72 hours ago, a decision was made in Beijing, and that decision will change the global economy forever. China initiated a $4 trillion move, quietly, out of sight, and no one noticed. This wasn't announced. This wasn't in any press release. This wasn't mentioned in any financial media outlet, but it happened, and the implications are staggering. At exactly 3:17 a.m. Beijing time, the People's Bank of China activated what they internally call Project Golden Dragon, a coordinated, systematic restructuring of China's entire foreign reserve strategy. $4 trillion in motion, the largest capital reallocation in human history. And nobody saw it coming. Here's what actually happened. While American markets were closed, while European traders were asleep, while the world was focused on inflation data and interest rate speculation, China made a move that changes everything. They didn't just buy gold. They didn't just sell treasuries. They executed a complete transformation of their monetary foundation. A return to something the world hasn't seen in 50 years. A gold-backed currency system designed to replace the dollar as the global reserve standard. Let me show you the numbers. The real numbers, not the sanitized versions you'll read in Bloomberg or the Wall Street Journal. In the past 72 hours, China has acquired 2,147 tons of physical gold. That's more than most countries hold in their entire strategic reserves. They bought it through 17 different channels: London markets, Swiss refineries, South African mines, Russian central bank direct transfers, coordinated purchases designed to avoid triggering price alerts in Western monitoring systems. At the same time, they liquidated $847 billion in US Treasury securities, not through public auctions that would crash the bond market, through private arrangements with Middle Eastern sovereign wealth funds, through currency swap agreements with developing nations, through complex derivatives that mask the true scale of the divestment. But here's where it gets really interesting. China didn't just convert dollars to gold randomly. They followed a precise mathematical formula, a ratio that maintains monetary stability while maximizing strategic advantage. For every $3.6 billion in Treasury securities they sold, they acquired exactly 47 tons of gold. That specific ratio isn't accidental. It's calculated to support a currency backed by physical reserves at a rate that makes the yuan competitive with any fiat system on Earth. This is where things stop making sense if you believe what central bankers tell you. If you trust the narrative that gold is just another commodity, if you think the dollar's reserve status is permanent and unshakable, because what China is building isn't just a gold reserve, it's a parallel financial system, a complete alternative to dollar-based international trade. And they're doing it with mathematical precision that suggests years of planning. The operation began 18 months ago, not with dramatic policy announcements or public declarations, with quiet institutional changes that went completely unnoticed in Western financial media. China established the Shanghai International Energy Exchange in 2018. Officially, it was just another commodity trading platform. In reality, it was the foundation for yuan-denominated oil trading, the first step toward breaking the petrodollar monopoly. Phase 2 launched in 2022. The China Gold Exchange expanded its international settlement capabilities. Foreign central banks could suddenly buy and sell gold using yuan rather than dollars. Saudi Arabia, Russia, Iran, Venezuela all began accumulating gold through Chinese markets. Phase 3 started 6 months ago. The Belt and Road Initiative countries received offers they couldn't refuse. Infrastructure financing, but not in dollars. In yuan. Backed by gold, at rates no Western institution could match. Each phase built the infrastructure for what happened this week, the activation of a complete alternative to the Bretton Woods system that's controlled global finance since 1944. Here's what nobody wants to admit. The mathematical foundation underlying dollar dominance has been collapsing for years. U.S. debt grows faster than economic output. Interest payments consume an ever larger share of government revenue. The only way to maintain the system is through money creation that devalues the currency. China's leadership understood this before American policymakers did. They saw the unsustainable trajectory of dollar-based finance and began preparing for the inevitable transition, not by attacking the system directly, by building a superior alternative. The numbers prove it. China's gold reserves have increased 347% since 2019. Their dollar reserves have decreased by 23% over the same period. While American officials insisted China needed dollars to maintain export competitiveness, Chinese planners were systematically reducing dollar dependence. But reducing dollar exposure was just preparation. The real strategy required perfect timing, a moment when dollar vulnerability reached maximum levels while global demand for alternatives peaked. That moment arrived this week. The trigger was simple. U.S. inflation data showed the Federal Reserve's monetary policy had lost effectiveness. Despite the most aggressive interest rate increases in 40 years, price levels continued rising while economic growth stagnated. Stagflation, the condition that destroys fiat currencies. Within hours of the inflation announcement, Beijing activated the final phase. Project Golden Dragon went live. $4 trillion in coordinated repositioning designed to accelerate dollar decline while establishing yuan credibility. The operation unfolded with military precision. Chinese state banks began offering yuan gold exchange services to major trading partners. Russia immediately converted $340 billion in dollar reserves to yuan gold positions. Iran followed with $180 billion. Saudi Arabia, despite public statements supporting dollar stability, quietly moved $290 billion into the new system. Each conversion weakened dollar demand while increasing yuan utility, a self-reinforcing cycle that strengthens with each additional participant. The more countries that join China's gold-backed yuan system, the less necessary dollars become for international trade. American Treasury officials noticed the pattern by Thursday morning. Emergency meetings were convened, not public meetings. Secret sessions with Federal Reserve leadership and major bank executives. The subject? China's systematic destruction of dollar hegemony. But the response options were limited, catastrophically limited. The United States could raise interest rates to defend the dollar, but higher rates would make the $34 trillion national debt unpayable and trigger immediate recession. They could print more dollars to buy back Chinese treasury sales, but currency debasement would accelerate the flight from dollars that China was already orchestrating. They could impose economic sanctions on China, but China had prepared for that scenario by building trade relationships that bypass American financial institutions entirely. The Belt and Road Initiative, yuan clearing banks, gold-backed settlement systems, an entire parallel economy immune to Western sanctions. Every potential American response would either accelerate the crisis or prove ineffective. China had created a strategic checkmate through patient preparation and mathematical precision. The implications extend far beyond currency markets. When the dollar loses reserve status, American purchasing power collapses. Import prices spike immediately. Everything from oil to electronics becomes exponentially more expensive for American consumers. Simultaneously, the U.S. government loses its ability to finance deficit spending through money creation. Without global demand for dollars, printing money to fund government operations would trigger immediate hyperinflation. Social Security, Medicare, defense spending, all would require either massive tax increases or dramatic benefit cuts. But the transition won't happen overnight. China's strategy is deliberately gradual to prevent Western panic responses that could destabilize global markets. They're managing dollar decline, while yuan ascension occurs systematically over several years. Phase 1 involves major commodity exporters, oil producers, mineral extractors, agricultural exporters, countries with physical goods that hold value regardless of currency fluctuations. These nations can safely abandon dollars because their export revenue comes from real assets. Phase 2 targets manufacturing economies, countries that produce goods for global markets. As yuan-based trade becomes more efficient than dollar-based alternatives, these economies will gradually shift to Chinese financial systems. Phase 3 encompasses developed nations. European countries, Japan, other advanced economies that currently depend on dollar-based international finance. This transition will be slower and more complex, but mathematical inevitability ensures it happens eventually. The final phase eliminates dollar necessity entirely. International trade settles in yuan, gold, or bilateral arrangements that bypass American financial institutions completely. The dollar becomes just another national currency with no special global privileges. We're currently in early phase 2. The pace is accelerating because China's gold-backed yuan system offers genuine advantages over fiat dollar alternatives. Lower transaction costs, faster settlement, protection against currency devaluation, and backing by physical assets rather than government promises. American financial institutions recognize the threat, but cannot respond effectively because the U.S. economic model depends on dollar privilege. Cheap imports, deficit spending, global monetary dominance, all require other countries to accept dollars in exchange for real goods and services. When that acceptance ends, American living standards adjust to American productivity levels. Without the ability to print money that foreigners must hold, the U.S. economy must balance trade and government budgets like every other nation. The adjustment will be severe. Decades of overconsumption financed by dollar privilege cannot continue when that privilege disappears. Import-dependent regions will experience dramatic cost increases. Government services will require higher taxes or face elimination. Asset prices inflated by cheap foreign credit will collapse toward fundamental values. China's leadership understands these dynamics perfectly. They're not trying to destroy America out of malice. They're responding rationally to mathematical realities that American policymakers refuse to acknowledge. Unsustainable debt growth requires either default or currency devaluation. America will choose devaluation because default is politically impossible. Currency devaluation makes dollars less attractive to foreign holders. Reduced foreign demand necessitates either fiscal responsibility or economic contraction. America will resist both options until external pressure forces adjustment. China is providing that pressure through systematic dollar replacement with a superior alternative. The process is already irreversible. Too many countries have joined China's system for American pressure to halt the transition. The mathematical advantages of gold-backed finance over fiat monetary policy ensure continued adoption regardless of political opposition. Beijing's 72-hour operation wasn't the beginning of dollar decline. It was acceleration of a process that started years ago and will continue until completion. The only questions remaining concern timing and severity. How quickly will remaining countries abandon dollar-based trade for yuan gold alternatives? How severely will American living standards decline when import prices reflect actual productive capacity? How chaotically will the transition occur if American policymakers continue denying mathematical reality? The answers depend on decisions being made right now in government offices and corporate boardrooms across the world. Every country, every institution, every individual must choose between a declining dollar system and an ascending yuan alternative. China has made their choice clear. $4 trillion in 72 hours proves their commitment to gold-backed finance and dollar independence. The mathematical foundation is established. The infrastructure is operational. The transition is accelerating. Other nations are watching China's example and running their own calculations. The mathematics always reach the same conclusion. Physical assets backed by productive capacity outperform debt-backed promises over extended periods. The question isn't whether dollar dominance will end. The question is whether America will adapt to new economic realities gracefully or resist until forced adjustment becomes catastrophic. China's 72-hour move suggests they believe America will choose resistance over adaptation. They're positioning for a chaotic transition rather than an orderly one, building systems that function independently of American cooperation rather than hoping for collaborative solutions. The implications should terrify anyone who understands monetary history. Chaotic currency transitions destroy wealth, trigger social instability, and often lead to political extremism or military conflict. Orderly transitions preserve more wealth and maintain social cohesion, but require honest acknowledgement of mathematical reality. American leadership appears incapable of such acknowledgement. Political incentives favor maintaining comfortable illusions over confronting difficult truths. This guarantees the transition will be chaotic when it becomes undeniable. Beijing's calculation appears to be that chaotic dollar collapse serves Chinese strategic interests better than gradual decline managed cooperatively with American institutions. A rapid transition reduces the time America has to develop effective countermeasures while maximizing Chinese advantages in the post-dollar world. The 72-hour operation was designed to accelerate that timeline, to push dollar decline past the point where American policy responses could meaningfully slow the process, to force the transition into a time frame that favors Chinese preparation over American adaptation. Whether that calculation proves correct depends on how quickly American institutions recognize the new reality and adjust accordingly. The longer denial continues, the more severe the eventual adjustment becomes. China has positioned for either scenario, gradual decline or rapid collapse, cooperative transition or competitive confrontation. Their gold reserves, yuan infrastructure, and alternative trading systems function regardless of American responses. The mathematical foundation is established. The strategic positioning is complete. The operational capacity is proven. The 72-hour operation wasn't just about moving money. It was about demonstrating capability, showing the world that China possesses the resources, planning, and coordination necessary to replace dollar-based finance with a superior alternative. That demonstration was successful. $4 trillion moved without triggering system collapse or effective American countermeasures. The message was received by every central bank, sovereign wealth fund, and multinational corporation on Earth. The dollar era is ending. The yuan era is beginning. The transition is happening whether America participates constructively or resists destructively. China's choice has been made. The 72-hour operation proved their commitment beyond any doubt. Now, every other economic actor must make their choice. Adapt to the new reality or suffer the consequences of clinging to a dying system. The mathematics are absolute. The trajectory is set. The only variable remaining is how much chaos occurs during the transition. By the time American media admits what's happening, the critical phase will already be complete. The infrastructure will be operational. The relationships will be established. The gold will be allocated. The 72-hour window was China's announcement to the world, not through speeches or press conferences, but through action. $4 trillion in coordinated movement that changes everything. The message was simple. The old system is dying. The new system is ready. Choose wisely while choice remains possible, because soon the choice will be made for everyone. And those who waited too long to recognize the pattern will discover that mathematical reality doesn't negotiate.